Hello everyone and welcome to our next technical analysis review for the Euro US dollar pair. Today is February 13, 2012 and we are currently looking at price action on our 10-minute chart. And as you can see, we had both a risk on and risk off trading session for today due to news coming out of Europe. And if you glance back towards or closer to our weekly open, you can see that price had rallied due to news about the Greek Parliament's approval of the austerity measures. So this news provided confidence to the market that something was finally being done to deal with the debt issues coming out of Greece. So for most of yesterday's Asian trading session, we saw this risk appetite, the euro strengthen in comparison to the US dollar, and this was just an indicator of the market's expectation that Greece would receive their next batch of aid from the Troika. So we saw this 83 pip rally prior to the European Open, but right after the European Open, we began to hear news from EU leaders that the vote for a Greek austerity plan would not be enough to qualify them for more aid, and that they were really looking for implementation of the plan, not just a vote. So, of course, as news began to come out throughout the day and we began to see scenes of the riots and the strikes and just more talks and more rumors coming out of Greece, this caused a reversal in this short-term bullish trend, and the short-term trend bias began to change and become more bearish. So then we are now seeing dollar strength come back into the market and more flight to safety in the pair. So then we saw this 95 pip fall in the pair. So most of our gains from the Asian session were totally erased from today's trading session and today's decline. So, if you were looking for an opportunity to enter a trade, there were actually a few places you could have set up your orders. Now, if you were in front of your monitor prior or 2 hours prior to the European Open, then you would have seen price fall back to the support around 32.37 or 32.35 area. Now, this support was actually the 61.8% Fibonacci retracement of the previous price drop from last Friday. And I know I don't have it drawn in, but let me flip over to the 15-minute chart so I can show you where this fib retracement comes from. Now, if I were to draw in a Fibonacci retracement from the low here at 31.55 or 31.56, to the high here at 32.84, and if you glance over, you can see that price found support at this 61.8% Fibonacci level right here. So then let me go back to the 5-minute chart and move over. So if you were in front of your monitor at this time, you would have noticed, and if you would have had your Fibonacci retracement drawn in, you would have noticed that this area around 32.35 was support, was our 61.8% Fibonacci level. But you not only have that, you also have this 100 SMA line serving as support also. So then you see this area of confluence. So if you were in front of your monitor at this time, you could have placed a buy order right here upon bullish confirmation, and you could have took your profit when the trade reached the R1 resistance, today's R1 resistance level at 32.72 for about a 35 pip trade. Or you could have held out on the trade and took your profit at the 32.84 resistance up here, which is really our 100% Fibonacci retracement level, and you could have took your profit up here for about a 50 pip trade. So like we mentioned earlier, once price hit this resistance at 32.84, the trend sentiment began to change and the pair began to slide and show signs that the trend was reversing. So at that moment, you should have been looking for opportunities to sell the Euro US dollar pair. Now, if you were in front of your monitor, you could have actually entered on the pull up to this R1 resistance at 32.72. And you could have actually placed a short order here, and you could have actually placed your stop loss on the other side of this resistance at 32.84, and you could have actually held out to this trade and took your profit once it reached the support at this 61.8% Fibonacci level at 32.35 for about a 37 pip gain. So then that was one trade you could have entered. Or you could have held it out. If you were a little bit more aggressive, you could have held out the trade. Since the market was already bearish, you could have closed it once it reached the daily pivot at 32.14 for about a 58 pip trade. So as the day went on, price continued to slide further, and we had a break below the 3200 psychological level, and right now we're trading around the 3190 area, waiting for the Asian trading session to begin. So once the Japanese markets open, or once the Asian session opens, we may see a climb back up to around 3225, 30 area, and then it continue its bearish trend. Or we may see the trend continue to fall and actually find support at this 3155 level. So then that's what we can look forward to during the Asian trading session. Of course, that's it for our technical analysis review for today, and I will be talking to you guys later. You guys have a wonderful day.